So I'm just gonna do a video on Tesla. I don't know if people have positions on Tesla. I personally do. Um, I'm pretty much delta neutral. I think I'm like plus 25. I did that calculation earlier. I'm plus 25. So that means, if you're not familiar with what that means, that just means that every time Tesla goes up a dollar, I make 25 bucks. When it goes down a dollar, I lose 25 bucks. So that means this morning I'm gonna lose whatever 18 times 25 is. So that's not really that much at all. It's like 400 or 500 bucks. Just because going into the close, I put on a bunch of, well, I'm not going into close, around like 247, I think. I put on a bunch of bearish hedges. I sold covered calls. I bought some puts, and I already had some puts because I knew at some point we were going down to 220. So all of those positions were just to hedge my shares, and I also had some sold puts. Unfortunately, those are going to be way down today, and my shares will be down a bunch, but it doesn't really matter because I'm hedged. So let's just say this keeps on going down. As long as I keep pretty much delta neutral, I don't lose any money. I'll lose a little bit because I'm plus 25, but if it goes down to 185, then what I can do, I can take off all my hedges, get all those gains on the hedges, and my shares will be down a bunch, but I didn't really lose any money. And then when it bounces back, I'll be up a bunch. So that's kind of the idea behind being delta neutral. And of course, you can't do delta neutral all the time, in my opinion. Some people do. I don't know. Mine's always with technical analysis because I don't want to be delta neutral when we tanked a bunch. Why would I want to be delta neutral when we're going to bounce back? I want to be completely positive delta because the odds are we're going to bounce back. So the reason I was delta neutral, though, just to show you real quick, is I think I showed you in the video, but we have 1, 2, 3, 4, 5. But in this fifth wave, I think I talked about this yesterday, but we had 1, 2, 1, 2, 3, 4, and this did not come outside this parallel line. So I was like, there's at least minimum one move down. Doesn't matter if it just goes to 238, 237, whatever. It doesn't really matter. I just know there's going to be a bearish move tomorrow. And then we get bad earnings and we go down to 225 or whatever it is pre-market. So I knew there was a move down. I didn't know how much. And this is probably only the end of wave 3. So just to break it down here on the 5-minute time frame, this did not come outside the parallel line, so we're probably looking at something like this. The 5 minutes kind of hard. Let's see, 225.89. Okay. So this is likely the end of the third wave. So wherever that ends at, I don't know where it's going to end. That will be the end of the third wave because that'll be the fifth wave of the overall third wave of the last leg. So I don't think that will be the bottom today. I think we're probably going to bounce and then have another move lower. And as it looks right now, I would imagine we're probably going to fill this gap that I've been talking about, 217. At the very most, I wouldn't expect to go past 211. That's the 1.61 fib of this right here. So I don't expect to go past that. If it goes past that, then that means we're absolutely tanking for sure. And we're probably going to go down to at least 185. But at this point, if it gets down to 211, then there's a very good chance that we're coming down here to 185 because at that point, remember the parallel lines make a big difference. We're already outside the parallel line right now, pre-market. So this is probably going to be a 5-wave move. That's another way you can figure it out. So we're probably looking at this. This is probably going to go down to 185, 190 now. And you can see, I don't know where I got this parallel line at, but I think that this is probably going to go down to 185, 190, and that is not a gap fill area, but it is a demand zone. So that's kind of what I'm looking at and what I think about today. Going into the market, I think we're probably finishing up a wave 3 of the last wave, but I would expect a bounce and then probably lower, and it's going to be kind of similar to this one right here, where at the very end, it just kept on going down and down and down, and it just didn't ever bounce. So, if you are hedged, the best way to play this is to not guess. Do not guess where the bottom is. Just let your hedges make you money and let it keep on going, because you'll kind of know when it bounces. You'll be like, all right, that's probably the bottom. But even if it does hit the bottom right here, like right here, it hit the bottom. I guess unfortunately this isn't a very good example. So maybe sometimes you do have to guess. I guess you can't really rely on this that much. Let me look on the 30-minute though, or lower. So right here, you have to go on low time frames to figure this out though. So you got 5 waves right here. I'm just using this as an example of when to take your hedges off. So if you didn't take your hedges off right here by guessing, because you can guess as well, I guess you have to guess at some point, and it's going so much lower that you pretty much are just like, okay, I don't care about nailing the bottom. I'm taking my hedges off, and I'm okay with just being down another $5 or whatever, and then eventually it'll bounce. But if you really want to be like scientific about it and you want to be at like pretty much perfect, you wait for the bounce and then you take your hedges off when you get a corrective move lower. So this is corrective, so you know you're going to get at least another move higher. You take your hedges off right here. So you missed out on $4. Yeah, you missed out on $4. Rather than guessing, let's say you guess right here, and it just keeps on going down, you lose more. I don't know. That's just the way I like to think about it, because I think guessing the bottom is really hard. So anyway, I just wanted to make that video. From there, I don't want to speculate on what's going to happen after this. But like I said, we are outside of the parallel lines already pre-market. So there is a very good chance this is going to 185, 190, and it's going to wipe out a lot of people. A lot of people are going to sell. But again, this is only a C wave on the big picture. Well, I guess 190. Here, let me draw the parallel line here. I'm just curious where that is on this. So all right, if it goes below like 190, then you have to think about the possibility of, so let's say it goes to 187 on Wednesday, November 29th. That's still within the parallel lines. It's probably an ABC move. If we break this parallel line and go lower than that to 172, then you're talking about potentially this. You're talking about potentially something like this. And that would not be good, because that would probably end up being a wave 1 down. So you can see how crazy this can get. So, yeah, not to get too much into the future because there's so many different scenarios. Basically, let's just focus on today. Look for it to probably go down to 190 now. That is outside this parallel line. And remember at the very open, we're probably, I'm not going to say 100% because these smaller time frames sometimes do weird stuff. But we're probably in the end of wave 3. Probably going to see a small bounce right at the open, I would imagine. And everyone's going to think we bottom, and then we're going to go like down here to 217, potentially 210. So that's it. That's just an explanation of how I was hedged going into earnings, just because I knew we didn't complete that move. And the one other thing also was, I think I talked about this in the video, was we broke this bottom right here, and I was like, all right, well, this is going to be 5 ways up. This has to hold. As soon as it broke that, I knew that we were probably already heading down, and that this was actually the top right here. So yeah, that's pretty much explanation of where we're going, and it could get really bad, especially for people that are just holding long. But hopefully everyone can learn how to hedge their positions so they don't lose that much money. And then eventually you end up making more money this way because, like I said, once it bounces back, if you're hedged to, let's say I hedge all the way to 190, I'm making all that money all the way down to 190, and then when it bounces back to 250, I get all my share money back, but I've already made all that money on the puts. So anyway, that's it for this video. I just wanted to give an update on Tesla. It looks like it's going to be a long day for people that are long, and shorts are going to absolutely destroy today. So leave me a comment, tell me what you think, like, subscribe, not already. Talk to you in the next video.